Hello, guys. Thank you very much. Once again, welcome to another episode of the Valetax podcast. My name is Dennis Mwenga. I'm the global market analyst here at Valetax. So, in this episode today, we are going to talk about something that can be deemed by many of you to be a little bit controversial. By many of you, I mean the people who have started their trading journeys. But let it not be controversial because our guest today has walked that path. And what are we talking about essentially? Growth. Is it possible to grow from a simple trading account? By a simple trading account, I mean a trading account with less than $10,000, $5,000, less than even $500, and work your way up towards becoming a full-time professional trader. What are the steps that you need to take? And what does that journey look like? So my guest today is very well placed to discuss about this topic. His name is TK. TK has been in the industry for more than 7 years, I would say right now. And from his start, the way he started from very humble beginnings, started trading with a small account. Now he has a following, a huge following of over 10,000 traders, 10,000 traders whom he has been actively mentoring even up to today. He's still mentoring them. And by the way, getting you, TK, to be here with us has been very challenging because of the demand that is there from these people who want to experience growth, and you are always close to them. That's one thing I've really loved about you. You are really close to your people. You really want to lift them up because you understand the story of coming from the bottom and crawling all the way up, blowing accounts and not giving up. So I'll give TK an opportunity, of course, to tell us his story, first of all, how he started and, what really growth is all about. We're going to have that discussion and whether starting with a mere cent account can get you where you want to be. So welcome, TK. Thank you very much for this opportunity. Really nice to have you, man.
Thank you.
Yeah.
So my name is TK. TK is short for Turkana Guy. So Turkana Guy is just, I started as a joke in a single room in Thika several years back.
In a single room?
In a single room in Thika, Makonge.
For those guys who don't understand what a single room really means, TK?
A single room is basically just a single room. Four corners.
Four corners, yeah.
You have your toilet and a bath area outside.
Yeah.
It's not a self-contained. It's just a single room where you can just sleep and cook at the same time. So a couple of years back, I was working at Mjengo in Nakuru, and I realized that, the years
Mjengo is a construction site.
For those people who know what Mjengo is, just basically in a construction site, and you are a manual laborer, which means you don't have any skill.
Yeah.
You're the person who, if they need something, you're going to pick it up, you're going to mix the concrete and everything.
Yeah.
So I decided, you know what, I know nobody in Nairobi. And then I told my sister, you know what, I just want to go because I am seeing no growth myself. I feel like the time is going and I'm timing. I'm not going forward. I'm not going backwards. So I told my sister, you know what, just give me fare, bus fare. I'll go to Nairobi and try my luck. So I boarded a bus, but these people kind of confused me because I said I want to go to Nairobi, and they said this goes to Nairobi. Instead, it was going to Thika. That's how I find myself in Thika. So when reaching Thika, a couple of days later, I realized this is not Nairobi, this is Thika, because I was convinced Thika was Nairobi because I've never been to Nairobi.
Yeah, Thika is close to Nairobi.
Yeah.
And you had never been to Nairobi.
I've never been to Nairobi. So I had nowhere to sleep. I had no place to sleep. So I used to just roam around town, just converse with the boda guys. For those people who don't know, boda guys, there are those people who have the motorcycles and they use it as a means of as a taxi, for lack of better words. So we used to talk with them all night. Then, when it reaches around 3 a.m., the business has slowed down. Now they have parked their motorcycle. No, you can sleep on one of the motorcycle until morning. Yeah. But I was not like a street boy. I was more of a clean street boy. I will ask business people to give me work. like sweeping the shops or something like that.
Yeah.
Then I'll get like 100 bob. I'll go use like 30 bob to eat, like 20 bob to shower, and you know those public bathrooms that are in town.
Yeah.
I'll use those one to shower, make sure I'm clean. Then one day I met a guy in the streets of like 4 months later. I met a guy on the streets in Thika, and he had academic writing where you can write for students abroad and you can get a little bit of money. I just told him I have experience which I did not have at that time.
By any means.
I didn't, by any means you have to survive. If they ask, do you have experience? You have to say, I have experience.
But you had gone to school before, right?
Yeah.
You had written compositions and all that. Yeah. So that was experience, man.
Yeah. And I was a sharp boy, not the sharp boy that they know. It's a sharp boy. So as a sharp boy, I went to a national school. I was sponsored all my way through school. So I was a bright student.
Yes.
Then I remember it was on a Saturday. I was given a test paper, and to gauge if I had experience writing or not. And I was seated across some other guys, and I asked them, how do you do this? How do you do this? I ended up doing the paper. It was a 2-page paper, around 550 words, and I aced it. Even the client gave it a 5-star. I did it too well that the work I did, they had to send it to the client. It was like to gauge me whether I know or I don't know what I was talking about. But it was so good, they had to forward it to the client, and the client gave it a 5-star. That's when I had a place to sleep, because now if you get that job, they give you a place to sleep. Though there are so many people sleeping on the same room, but nonetheless, it was a place to sleep, and you can pay for your own food and everything like that. So that is where I started. Now I had no laptop, no computer. I had a M-Copper phone. For those people who don't know what M-Copper phone is, it's a phone that you pay daily. If you don't pay, they lock it. You can't use it.
So it's on loan.
It's on loan, and it was a cheap loan. I was paying around 85 shillings a day. It was a really cheap phone.
Yeah.
But nonetheless, I used to use the Wi-Fi, the workplace Wi-Fi, to learn Forex. And people were discouraging me. And those people who were discouraging me are the ones who are asking me to send them something right now. So who is laughing now? Eh? Who is laughing now? Now, fast forward a couple of years, I started to post my view. I used to post it on Sunday, my view on the market. I'll tell people this is my personal view on this pair, for example, Euro USD. This is what I'm seeing. This is not a financial advice. This is just me looking at the market, but it used to do very well. And on TikTok, if you want to know if your video is doing very well, first of all, you see how many people are favoriting your videos or saving them. When you see the numbers increasing, you know you are doing something, and that is when I started building my community.
And you're doing all this for free?
Yeah, I was doing this all for free. I'm still doing it for free, by the way.
Okay. Yeah. Contributing to the community. And TK, most of us, when we start trading, first of all, we usually start, it depends with your level of greed, I suppose. Maybe excuse me for saying that, but some of us start with live accounts, others start with demo accounts. How did you start, with a live or a demo account?
Of course, I think 99.999% of all traders starts with a demo account. Basically, a demo account is just to bring you to the environment of how the whole thing works.
Yeah.
How to place positions, how the spread works.
Yes.
How the commission works.
Yeah.
How to place a stop loss, how to place a take profit, how to analyze the market. Yeah. Now, after doing that for some time, now you start easing yourself to a live account. Yeah. So I think it is necessary.
Yes.
It's of absolute importance. Yes. You start with a demo account.
A demo account.
Now you can familiarize yourself on how the real market works, because apart from the amount of money that is on a demo account, which is not real money, every other thing is real. From the market is a real market. So you get to familiarize yourself on how it really works before you get to a live account.
Yeah, okay. And the thing is, I usually hear with traders is someone starts with this demo account and then they're doing so well on the demo account. You got a strategy, you're doing so well. And then when you go to live accounts, I hear some traders, they say, well, I tried this on demo, it worked, but it's not working on live. So there must be something wrong with demo. Do you think there is something wrong with demo?
I don't think there is something wrong with demo. It boils down to your trading psychology. Okay. Even the market is being controlled by people, right? And people are subject to emotions, right?
Yeah.
So, for example, if you have a $10,000 account which is demo, it's not real money. If you lose it, you're not going to feel bad because it's not your money, right? But when it is your money, you have emotional, and every beginner and intermediate traders, they have emotional attachment to the money. So, and if you have emotional attachment to the money, you tend to make mistakes, right? You tend to make mistakes, and that's where now it boils down to trading psychology, which I always tell people and my students that divide Forex. The Forex is divided into 4. We have your trading psychology.
Yeah.
We have your risk management. Yeah. Then we have your technical and fundamental analysis. Yes. All these should work in harmony to give you a good end. If one of them is amiss, there's a high chance you're going to lose money. Yes.
So the thing is with the demo account, there is this notion that this is not. There is no emotional attachment.
Yeah, because it's not real money and it's not your money.
Do you think the emotional attachment with the money comes from the fact that maybe someone doesn't understand the first thing that, and this is something that we were talking about earlier before we even started the show, that you need to start trading with what type of capital did you call it? Risk capital.
Yes.
Yeah. What is this risk capital?
I mean, this is basically the money you're ready to lose. Money you're ready to lose. And people really forget that.
I don't want to lose money. I'm not ready to lose money.
Let me tell you, and I'll say it direct to the camera, that if you are a beginner or intermediate trader and you're not ready to lose money, maybe this is not for you. Because let me tell you, the truth is, it gets worse before it gets better. Okay. Even when you're building a house, you must first dig the foundation before it goes up.
Yes, true.
No, you can't come the first day and start making money. You might, but that will be luck.
That will be luck.
Yes. That will be luck.
Yeah.
But if you are a beginner and at some point you withdraw the money from the market, now you know it really works. Now you just need to work on getting that withdrawal every time you're trading.
Yes. Yeah. Okay. So now I want to transition from demo to live, but I am still a little bit suspicious.
You're not feeling okay.
Not feeling okay. I'm not feeling really, really confident. There is a type of a trading account that can help you, which is the cent account.
Exactly.
Yes. So yeah, talk about this. Yeah.
So for people who don't know what a cent account is, a cent account is basically where you put like a small amount of money, but it reads a lot of money. Mm-hmm. It's still real money.
Yeah.
But it can read, and this is for example purposes only.
Yeah.
Maybe $10 will read $1,000.
So it's 1,000 cents.
It's 1,000 cents. Now you get the point, right?
Yeah.
But on your MT5, it reads USD, so 1,000 USD. I think this is very important. Why? Yeah. Why is it very important? It's very important because first of all, it helps your trading psychology, right?
Yes.
Now you are seeing big money, which is real money, by the way, but not as big as what you're seeing. So, for example, if it's $100 or $10 and you're seeing 1,000, it will ease you when it reaches the point now you're seeing big money, because in Forex, when the money starts increasing, it kind of triggers your trading psychology and it messes you up.
So TK, as you were saying earlier when you are talking about the psychology, now I have started with a cent account. I'm not well funded. I've just started with a cent account, maybe fund it with $100. Now I have like around 10,000 cents to play around with. So that gets your mindset into the psychology of handling huge amounts of money.
Exactly.
So when you're practicing your risk management, for instance, and this is very important to have your psychology, and so you are looking forward for greater things, right?
Yes. Yeah. So basically, cent account is not. I think a huge percentage of pro traders do not use cent account. It's basically I will advise intermediates and beginners. Why? Because, for example, if you deposit $10 in a cent account, right? That is 1,000 cent, right? Now your account will read 1,000 USD, right? When you start trading with that account, now it gives you it incline your trading psychology to handle big money. Because let me tell you, it is a path you're going to follow. At the end of the day, you're going to handle big money. So at an early stage, it inclines your trading psychology to start accepting and start familiarizing yourself with big money. So when the big money comes, you're okay with it. And if you lose it, you're not going to lose $1,000. You're going to just to lose 10 USD, but it's reading $1,000. It will help you not to lose a lot of money, while at the same time sharpening your skill, and at the same time it is helping you with your psychology of handling big money.
So you're basically getting the best education at a very low cost.
Exactly.
You are experiencing the real markets. And even better, I'll dare say this, even better than the demo, you're experiencing the real emotional and
roller coaster
of
exactly. That is exactly
that goes on with trading. So with a cent account now, so this gives you room, encourages room for growth, right?
Exactly.
Okay. So yeah, exactly. This is what I'll call, the advantage of the cent account.
Yes.
Now, so scaling up. So you want to scale up. You have started with your account with your $100 and you want to scale up. One of the most important things that traders need to understand when it comes to scaling up is risk management.
Exactly.
How do you look at risk management from a risk to reward ratio? What is this risk reward ratio perspective here?
Basically, for those people who don't know what risk to reward ratio is, basically what you're risking and what you're getting. Yes. So if I'm risking, for example, if I'm risking $10 to make $30, that is 1 to 3 risk to reward ratio. What I'm risking, I'm getting 3 times. Are you together? I'm risking $10 to get $30, which $30 is 3 times the $10. Why is it very important?
Yeah.
And this is a conversation that we've had for extended period of time with other traders, that it doesn't really matter your win rate. A lot of beginners tend to prioritize win rate at the expense of
is it this like a sort of a gambling mentality?
Yeah.
Prioritizing win rate.
Win rate is not as important as people think.
Yeah.
And that's where now the gambling mentality comes.
Yes.
Right? Yes. A person may have a win rate of just 20%, which means he can win just 2 out of 10 trades. He can only win 2 and lose 8. But this person is still profitable. How? You may ask myself how. Now this is where risk to reward ratio is. Now let's take, for example, a risk to reward ratio of 1:3, right?
Yeah.
Which means for every dollar you're going to risk, you're going to make 3 times, right? And let's take person A and person B. Person A has a risk to reward ratio of 1:3, and person B has a risk to reward ratio of 1:1. So, which means the person who has a 1:1 risk to reward ratio is risking $1 to make $1. But the other person is risking $1 to make $3. Yes. Now, let's say these people take 10 trades each. Yes. Same setup, same everything. Yes. Right? And they both end up winning, let's say, 4 trades each and losing 6. Are you together? So the first person with the second person with 1-to-1 risk to reward ratio has made $4, right?
Yeah.
But has lost $6 because now the person B has lost 6 trades.
Yeah.
Now you take -6 plus 4, which will still get -2. At the end of the day, the person with risk to reward 1:1 risk to reward ratio is at -2, which means the person has lost money. Now we go to person A, where the 1:1 risk to reward ratio.
Yeah.
He won 4 trades, lost 6. In those 4 trades, he was making $3 each. Now that is 4 times 3, which we get 12, right? He has made $12, but remember he lost 6. Now, because your risk to reward, the first one is like 1:3. 1 is what you're risking. Now the person has risked $1 and lost 6 times, which means the person A has lost $6. Both of them have or may lose $6, right? But remember, the other person, since the risk to reward was bad, is at -2, and person A is at 12, which is 4 times 3 minus the 6 is at +6, right? Same setup, same everything, just the difference of risk to reward ratio. Now you're seeing one person is at -2, where basically the person has lost money, and the other person is at +6 with the same stuff. So that is how important risk to reward ratio is.
Yeah. So this basically makes sense. In other words, it's how you truly scale up as a trader. It doesn't matter, as TK, as you have said, it doesn't matter the win rate. What really matters is bottom line. Bottom line, how are you managing your risk? Bottom line.
Yeah, risk to reward ratio.
Risk to reward. I can have a series of losing trades, but one trade is enough to cover up.
Yeah.
For this series of losing trades, one trade is enough to make me break even easily.
I'll just put this across really quickly.
Yeah.
If you have a risk to reward 1:3, and you go on a losing streak, it will take you 4 trades to go to the negative, because the first 3 trades will erase your profit, and then the 4th trade is where now you go to the negative. And I think when you become a pro trader, it is not really common for you to lose 4 trades in a row, unless you're overtrading.
Unless you are overtrading.
Yes.
So yeah, in other words, what you are saying also is, from what I'm gathering, is trading really is a numbers game. Yeah. This is a numbers game. It's purely a numbers game. It's that obsession with strategy. And when someone is starting out in trading, there is that obsession with, this is the best strategy. This is the best strategy. Just go online and see. Yeah. Everyone claims their best strategy.
Yeah.
The win rate.
And the win. No.
Yeah.
Let me put this across really quickly.
Yes.
I don't think there is one strategy is better than the other, because at the end of the day, the market is it's a ever-changing market, right? For example, I use price action as my strategy.
Yes.
But price action is not making me a profitable trader. Now, going into the market and fine-tuning my strategy is what is making me profitable, because the market is ever changing.
Yes.
For example, the price action I was using last year, it is not profitable now. Why? Because the market is changing. Now I have to take that price action, remove some things, introduce some things, but this is at the lower level of the strategy. Now, you need to fine-tune your strategy. So saying that one strategy is better than the other is just a lie.
It's a lie.
And you're never going to be profitable if you think this is better than this, because I've seen people making money with, for example, smart money concept or ICT concept, and price action. It boils down to how are you going to react to the market when the market is changing. Because the same thing, for example, in price action, I'll use this as an example really quickly. In price action, we have what we call support level. We have a resistance and support. In other strategies, they call it supply and demand. Just the same thing, different words to describe it. So basically, Forex, we are just doing the same thing, but people have come up with different names to describe different things. But it boils down to just doing the same thing.
Yeah. And now that we are talking about trading strategies now, so keeping up with that conversation on trading strategy and the fact that there is no one size that fits all, if I can put it that way. You need to be able to adapt, and the most important thing you have said, managing risk, advancing or growing through scaling your R units, your risk units, this now being the ratios 1:2, 1:3, and all that. Also now, the challenge usually sometimes can come when a trader is obsessed with, let's say, one pair. Okay, so is it possible for you to just scale up being obsessed with one pair, because you stand the risk of forcing setups, right?
Yes.
Yeah.
That is very true. As a beginner intermediate trader, I will highly suggest that you trade as many pairs as you can.
Yeah.
Not too many, not one.
Not too many, not one.
Not too many,
I
not
like
one.
that, yeah.
For example, I will say when you're doing pre-market analysis, and this one everybody should know that you should do pre-market analysis before you enter the market. When you do pre-market analysis, make sure you're doing analysis on several pairs, like 5 or 6 pairs.
Yeah.
Why? Because now, if this, for example, if I analyze Euro USD and I realize for it to reach my optimum entry area, it will take few hours or few days before it reaches there. I have other pairs to trade while I'm waiting for this.
Yes.
If you're trading just one pair,
Yeah.
you tend to force trades and force entries where there are no entries. And what happens after that, I think everybody knows. You're going to blow account, you're going to lose money, and you're going to blame other people for your mistakes.
Yeah, very true. Very true. So yeah, it's you diversify, but not so much as well.
Yeah.
At least you try to look for some pairs which are a bit correlated, not way off, and then of course factoring in the spread and the cost of execution, in other words. Okay, I like that.
For example, you can just choose pairs that the quote currency is USD. For those people who don't know what the difference is, the first pair, for example, Euro, USD. Euro is the base currency, then USD is the quote currency.
The base and then the quote.
Maybe you can choose a quote currency that ends with USD. That will be CAD. For example, Euro USD, GBP USD, XAU USD.
And by the way, that will be easier to monitor because it will require you to maybe primarily monitor the USD.
Yes.
You watch the behavior of the USD, behavior of the USD. Even personally, the way I trade, I look at macroeconomics. I try to look at what is driving the headlines for the day, where the sentiment is at. And in analyzing that sentiment, I try to look at what is affecting dollar sentiment principally before even looking at
the technical analysis.
What is really going to drive the dollar today. So looking at things from that perspective, it becomes very easier to say, okay, let me trade like 3 pairs, each of them with a dollar
as quote currency
aspect to it. So now look, talking about now the fact that you want to grow from $100, grow your trading, enter that professional level of trading where you can trade full time. So you are considering a long-term career, in other words. So what kind of broker infrastructure or what type of broker are you looking for in order to transition from, we are talking about demos and all that. So, what are you looking for in a broker?
When you're starting up, you're basically a beginner. You don't really care the broker you're trading with, because now you're trading very little amount of money. Not because you don't have money, it's just because you're starting out. But as you grow, and now your account size grows, right? Now there's that perspective of now, what is the commission that the broker is taking? Spreads. What are the sizes of a spread? Because most of the brokers right now, if you use 0.0 and use gold, for example, 0.01 as your lot size, you'll get around 40 cents 50 cents as the difference between the bid and ask price, which basically is the spread. But when you now start using big lot size like 5, now that's still now that starts counting. Now you're not starting at 40 cents. Now you're starting at negative $40. $40 is not small, man. Now that is where now you start considering the broker you are working with. Now, do they have seamless withdrawals? Do they have seamless deposits? Their customer support, is it top notch? Right? The person who is in charge of your account at the brokerage level, is it a reliable person? You bring this all into consideration. That's why I always tell people, trade with the best broker. And Valetax is giving me all of that. My manager is a very good manager. I have seamless withdrawals, seamless deposits, and everything. I can withdraw through my bank, through Binance, through M-Pesa. Everything is seamless. And another thing I really, really like about Valetax is that we have very, very, very thin spreads. That really counts, right? Because personally, I'll trade between 20 to 30 lots a day, and that is on a bad day. Sometimes I even reach 50 lots.
And you told me sometimes you scalp also.
And sometimes I really scalp. So just let's do the math really quickly. If I'm starting at negative $40 with a 5 lot size on gold, which means if I'm trading 50 lots per day, that will be $40 times 50. That is 400 times 5, which is $2,000, right? No, now $2,000 now start to eat you out, because now that is not small. It's not small money. If you convert that into Kenya shillings, that is 260,000. There are some people who are not making that for the whole year. So it's really important now when you start. And this is not Valetax. I'm just it's an example.
Yes.
It's just an example that I'm putting across. When now the big money starts coming in, now you need big lot size. Yes.
Okay. So we'll say Valetax, even from an educational perspective, Valetax gives you that room to grow, in the sense that, as we said, you're moving from a demo, then to a what? A
cent account. From a cent account now to normal accounts.
To the normal accounts. And Valetax has that infrastructure to help you grow. So,
and it's seamless when you are transitioning from demo to send, from send to normal account. Is very seamless.
So there is no pressure.
Yes, there's no pressure.
So now, from what we have gathered here today is going full time does not mean a massive home run hit. Right?
That is exactly. So home runs, you're gonna get some home runs in your journey, but I will not say that is the main place you should focus, right? I always tell people that let's say you're being paid 30,000 shillings a month, right? And every month you're making 3 times that. You're now making 90,000 Kenya shillings from Forex trading, right? Make sure that in 6 months you take your history for the last 6 months. If you've been making 90 for the past 6 months, now I can say it's safe for you now to leave your job and do Forex full time, because now, first of all, it is proven that you can make money because you've done it for 6 months straight. And you are making 3 times of what you're being paid. So there's no point still going to work. You can just sit in your house now and start printing your dollars peacefully without anybody telling you what to do.
All the beginners want to be like you and they grow up, bro.
This is a process, but let me tell you, you'll be there.
Yes,
it will be there and you will see.
So guys, thank you very much for shedding light on growth and putting out the fact that you can start small. Your story is very inspiring. Pretty sure you started even with a very small account.
Yes.
But the most important thing that you have said, and that we're looking at here, is having that proper roadmap. I am a beginner. I don't know much. Okay. I am afraid of taking risk. I have this anxiety. Boom, let me move to the demo account. As you said earlier, when we started out, to just recap, 99.99% begin from there.
Yes.
Okay. Then I am still not very confident. I am still a little bit skeptical. No worries. jump to the cent,
That's center.
jump to the cent account. And then another thing that we've covered and we talked about, it's your learning curve. The learning curve that you also take through your students, the ones that you mentor, is a learning curve that involves them paying a very small cost.
Yes.
Yeah, this loss that they make, it's fees.
Yes.
It's like same school fees.
Exactly.
Yeah, and it's a very small cost given that you're using a cent
account.
You're using a cent account.
Yes, but at the same time, you're getting the psychology of big accounts.
Imagine at the same time you're getting that psychology of big accounts, and you are, you're using this is I like the way you're putting it out there. So you are getting the mindset of a professional trader,
well,
at the minimum,
with the basically, just to make it a little bit short, I can say,
yes,
you're minimizing risk while maximizing the output.
So TK, what we are saying is that your roadmap towards starting, moving from just a small retail trader to being professional and doing this full time starts today.
Yeah.
You don't have any excuse?
Yeah, you don't have any excuse. You start. There's no reason to keep procrastinating, and time goes, right?
Yeah.
And if you start, don't give up, because if you, let's say you put in 5 months or 6 months, then you decide to quit, you've just lost the 6 months. It is we would have rather do something else. Now, if you start, you don't quit. It's going to get hard.
Yeah.
No doubt about that, but it gets better.
It gets better.
Yes.
It gets better. So guys, there is no saying, I don't have money, I have little money, I only have $50. No, there is a cent account, there is a demo account, there is a cent account, the infrastructure is out there, and you have people like TK who can guide you, who can inspire you into becoming better and to reaching and achieving your goals. So thank you very much, TK. It was really nice.
My pleasure.
The show.
My pleasure.
And your story is very inspiring.
Thank you.
And till we talk next time.
Yes.
So goodbye, guys, and have a very good time. Green pips to you all. Watch your risk. Watch those risk units. Yes. Remember, risk to reward is everything.
Yes. Goodbye, guys. See you on the next one.
See you on the next one.